States. This is me, John, the Harvard of United States stock investing. Let's start today's United States stock market news for May 2nd. Today, Mijon continues to steadfastly protect the integrity of United States stock investors. Today as well, I'll leave an important question for you. Let's start by going through the answers to the questions left in the comments section. This is a sincere comment left by Lee Haeyeon Nim. Hello, Lee Jae-myung Mijunim. You are the very first investor who started investing in Deokmun. Thanks for the excellent info in your videos. I'm watching them closely, but I'm commenting because I feel very anxious. When I look at people who have succeeded in investing, it seems like those who invested in value stocks and growth stocks have made money without much difficulty. Why is that? From what I see, I think it's a very important question. We've talked a lot about the importance of ordinary distribution investors. And in reality, distribution investors don't just have 18 items, 16 items, or 20 items. It's not like that. It's a misconception that dividing your money into several assets is a safe investment strategy. So, you need to have stocks by sector, you need to have growth stocks, you need to have defensive stocks, and you need to have cyclical stocks as well. It's prudent to invest in a balanced portfolio of stocks from the United States, Japan, China, and Korea across different regions. And if you put all your assets into stocks, that's not good either. You need to have real estate, bonds, stocks, and invest in various different assets in a diversified way. That's the true meaning of diversified investment. But even though I know all that, I'm only investing in stocks right now. Recently, I also organized some real estate that I used to have. Also, I don't even look at rental properties, let alone buy them. I don't invest in rental properties and only focus on growth stocks. Let me explain the reason for that as clearly as possible and give you an answer. Let me show you a screen. Everyone, take a look. There is an exchange-traded fund called SPY that tracks the S&P 500 on, but there are actually two more exchange-traded fund S derived from SPY. One is called SPY5 and the other is SPYG. The 5N here stands for 5 ALU. So it only includes value stocks, which means SPY now contains only the 500 companies that are part of the S&P 500. Among them, this exchange-traded fund only includes stocks that have the characteristics of value stocks. That's how you should look at it. On the other hand, SPYG is for growth stocks, so it only includes companies among the S&P 500 that have the characteristics of growth stocks. That's how you should see it. And lastly, for comparison, I brought up QQQ. Many of you probably know this well, but QQQ is mainly composed of tech stocks, except for the financial sector, in the National Association of Securities Dealers Automated Quotations Index. It tracks the top 100 large-cap non-financial stocks by market capitalization, which is the National Association of Securities Dealers Automated Quotations 100. Now let's take a look at how these four stocks ETFs have performed over time, so you can get a clear idea. First, let's take a look at their performance over the past month. In the last month, SPY returned 0.45%, SPY5 value stocks returned 3.35%, SPYG growth stocks returned plus 2.5% and 1.90%. Okay, then let's extend the period a bit and take a look at the performance over the past 6 months. In the last 6 months, SPY fell 2.20%, while SPY5 focusing on value stocks dropped 5.5%. Growth-focused stocks like QQQ performed better, declining only 1.18%. So up to now, SPYG has performed the best. This time, I'll extend the period to 1 year, but even if we look at it over a year, the results are similar. SPY, which includes SPYG growth stocks, performed the best with 18.46%. The second best exchange-traded fund was QQQ. In third place was SPY. And finally, SPY. 5 value stocks performed the worst with just 3.09%. So, to get a more comprehensive view, let's look at the returns over 3 years. Even over 3 years, haven't value stocks performed the worst? 34.74% value stocks, 24.28%, and growth stocks over 41%. QQQQ exceeded 51%. Okay, let's examine a longer time frame too. So, which exchange-traded fund had the best performance over the past 5 years? Let's take a look. SPY plus 97.49, value plus 77.29, growth plus 108.57, QQQ increased by 126.42%. Lastly, let's take a look at the 10-year performance as well. Over 10 years, the gap has widened even more. As you can see, value stocks couldn't even reach a 100% increase. So over 10 years, they couldn't even double. But SPYG, which is made up of growth stocks, grew by as much as 229%, and QQQ soared by a whopping 343%. Now, if we look at the rankings by period, overall, tech stocks performed well in the short term, the mid-term, and even in the long term, continuing to show good results. So then, why do people invest in dividend stocks, and why do they keep their money in value stocks? This is because people value stability. The reason is, simply put, to reduce investment risk. Investment risk is different from the risks we face daily. It's not about danger, but volatility. We must adapt to volatility as it's the true source of investment risk. In the past, for humans, the biggest risks were two things. One was being killed by a predator, and the other was starving to death. For our ancestors, joining a group or herd was the safest way to survive. These were our two main stresses. That's how it was. That's why we experience a lot of stress. It's a matter of survival. So, when you look at the history of human evolution, there were two main sources of stress. One was not having enough food to eat, and the other was being chased and killed. So, when we feel stress, our bodies recognize it as one of those two things. So, when people are stressed, they tend to eat more. This is a natural instinct, and you can observe this in many people. In the past, when hunting or gathering food, our next meal was uncertain. So, when stressed, our bodies craved more food to prepare for the unknown. That's why the risk of the market changes. When the market becomes unstable, people tend to overeat. To survive, we instinctively act in specific ways. So, when that happens, if you focus on just one portfolio, one asset, or one sector, you can end up repeating the same cycle of losses and gains, just like many people unknowingly do in the United States stock market. That's why, to prevent these kinds of mistakes, you need to diversify your portfolio by including various sectors and different assets. This way, your investments will be more resilient to volatility. By doing so, you can invest with more confidence and stability, and you'll be less likely to make mistakes. This approach helps you avoid making hasty decisions in the United States stock market, so your chances of achieving better returns increase. So, when you make decisions, if you can handle this kind of volatility as promised, you'll be fine in the end. You don't have to split your investments so meticulously. That's because when you look at the history of the past, it's okay. Focusing on Teguju was actually a more effective investment strategy. But if you do it this way, there are a lot of people who can't handle the risk. So that's why most people don't do it like this. That's why I can explain it this way. Here's a realistic example to explain this. Let me use Tesla's stock as an example. Tesla's stock price from November 5th, 2021 to January 6th, 2023, which is not even a year and a half, experienced a very sharp decline during that period. The stock price dropped by as much as 72.25%. Most people can't endure that kind of situation, and even I still get nervous and anxious. But how many people can actually endure until the end? This is something you really need to think about. NVIDIA is currently the hottest stock. Let's examine its chart history. From November 19th, 2021 to October 14th, 2022, it dropped by more than 65%. How many people do you think could have endured during that period? In cases like stocks, it's hard to endure, and most people can't hold on. So it's not that people couldn't invest in stocks, but rather, if you look at it differently, they acted instinctively to protect themselves, and that's why they sold. If you look at it this way, it makes sense. Let's take a look at just one more thing. Meta platforms. Recently, among the stocks I pay attention to, Meta has attracted a lot of interest from many people, so I wanted to bring this up. Meta's stock price also plummeted by about 75% from September 17th, 2021 to November 4th, 2022. If we had bought during that time, we would have made a good profit. But the important thing is, can most investors really endure a 75% drop in stock price? This is something we need to think about. So I try to avoid stress that I can't handle. Many people think it's important to pursue efficient portfolios, but I don't handle stress well. Even if the stock price drops by 30% or 50%, it's okay. I invested in 10 stocks. Even if 5 of them go down and I lose money, it doesn't bother me. Focusing your investment on a single sector can still yield effective returns. Here's how to manage your portfolio. Today, I will organize the market situation for you. Let's take a look at the S&P 500 chart first. Yesterday was a mixed market. The number of declining sectors and the number of rising sectors was similar, but it appears more stocks declined. However, despite that, all three major indexes closed higher, with the National Association of Securities Dealers automated quotations rising more than 1.5%. That's because there was a sharp rise in tech stocks, which we can easily invest in, especially the so-called Big Seven, except for Tesla. All six of them went up. Recently, companies like Amazon, Meta, Microsoft, NVIDIA, and Broadcom, these prominent tech stocks, all showed clear gains, which made the market surge. This is how it can be summarized. What led the market yesterday was the Nasdaq 100. The Nasdaq 100 is made up of mega tech companies. It went up by 1.31%. Now, the reason why the Nasdaq 100 performed so well is because of Meta and Microsoft announcing strong earnings. The S&P 500 gained 0.71%, while the Dow Jones, consisting of cyclical stocks, increased by 0.27%. In the United States stock market yesterday, tech, industrial, and cyclical stocks performed very well, while other sectors varied. On the other hand, if you look at the sectors that performed the worst, they were healthcare, consumer staples, basic materials, and utilities. These sectors couldn't avoid a decline, so we saw a bit of a mixed performance depending on the sector. Now, this is the chart. Soo Hye-joo, known for artificial intelligence, led a sharp rise over the past 2 years. However, there have also been many concerns about Soo Hye-joo related to artificial intelligence during that time. People are questioning if the artificial intelligence boom is over or if artificial intelligence beneficiary stocks can continue to rise after the hype settles, similar to the dot-com bubble aftermath. But despite these concerns, there have been a lot of positive changes. Recently, the belief that artificial intelligence beneficiary stocks would be primarily driven by the United States market has intensified. So, when that happens, the artificial intelligence beneficiary stocks that had previously shifted to a different sector come back to the artificial intelligence beneficiary sector again. That's how you can see it. In this process, 4 sectors that are closely related to me have benefited, and that's how you can organize it. The S&P 500 has risen for 8 consecutive days now. It's an amazing rally. It's hard to believe that it keeps going up like this without a break. The relative strength index is still below 56, and it needs to exceed 70 to be considered technically overbought. This indicates there's still room for adjustment, allowing the rally to continue. The S&P 500 has been rising for 8 straight days, but there are no indications of it being overbought. That's the appropriate perspective. Stocks can keep rising, so there's no need to worry. That's my main point. The reason I'm mentioning this is because corrections usually happen when there is excessive optimism among investors. Yesterday, Apple and Amazon's earnings results came out. So, in the market, you could say that the recent trend has weakened a bit. Looking at it this way, will this kind of trend continue or will it turn downward again? Today, the United States employment report for April is being released. If you look at it this way, you can see the overall market trend regarding the employment report. In March, there were 228,000 jobs, but the number is expected to decrease to 150,000, indicating a further slowdown in employment. There are such expectations, yes. The unemployment rate is expected to remain at 4.2%, the same as before. In my view, despite significant job losses, this may be necessary for the market to regain momentum and drive recovery expectations. As soon as the related figures are released, this broadcast will end and the United States employment report will be announced right away. So that's the part our investors are focusing on. Let's review some key market indicators, starting with the S&P 500, the most representative market index. It's been staying around 40 to 55, but recently it dropped a bit to 42. But even so, just a few weeks ago, it went up to 55, and if you look back to around May 16th, the market breadth was much higher. Now you can see that the market breadth has recovered quite a bit. The volatility index has also decreased a lot. Until just a short while ago, the volatility index was over 50 or 60, but now the fear index has dropped to around 23.74. The Fear and Greed Index provided by Cable News Network has also risen to 40, and the market score provided by Choice Stocks is also at 41. Please refer to these figures. There will be a special broadcast tomorrow as well. Kim In-jong from Choice Stocks will join us to share his insights on risk-free ways to invest in the market. This broadcast is pre-recorded. When it comes to stock investment, the hardest part is actually timing, when to buy and when to sell. This is something that causes a lot of concern for investors. Tomorrow, Mr. Kim In-jung will explain the differences between the market score and cable news network's Fear and Greed Index and provide us with answers regarding this topic. Special broadcast tomorrow. We look forward to your participation. Next, the results of the American Association of Individual Investors survey have been updated. The situation has worsened. As you can see, now only 20.9% of market participants think the United States stock market will go up in the next 6 months. I'm showing a neutral outlook right now. 19.8% are neutral, and investors with a negative outlook make up nearly 60%. So currently, the difference is over 40%. Historically, when there is such a large gap, it means that a negative sentiment is dominating the market, and this can be confirmed by the results of the American Association of Individual Investors survey. Finally, United States tech stocks are performing well, with most sectors rising lately. Bistro Corporation performed best among them, increasing 5.92% in a single day. Second, Credtech Energy rose by 5.78%, Bistro Plus by 5.19%, Celestica Plus by 4.52%, Meta Plus by 4.23%, Talon Energy Plus by 3.84%, Innodata Plus by 3.78%, TSMC Plus by 3.62%, Amazon Plus by 3.13%, Nextracker Plus by 3.10%, Broadcom Plus by 2.53%, NVIDIA Plus by 2.47%, Alphabet Plus by 1.57%, and MicroStrategy by 0.39%. Bitcoin also surged, reaching 96,700. 3 stocks were the worst performers. Uber fell by 0.15%, Tesla by 0.58%, and Palantir dropped by 1.89%. Recently, the stocks that performed well are now showing the most modest gains. This is how the rankings are organized. The content prepared for the first time today is a bit special. If you look at it, this is content related to the performance of major YouTube channels. Since 2020, I have been running major YouTube channels, and I have tried to distinguish and record the differences between each channel. To put it simply, I don't really like being called a content creator. I want to be an influencer. I want to be someone who has a positive influence on others, even if it's just a little bit. That's why I don't want to be satisfied with just providing information. So, in that sense, there's a slight difference between me and other channels. I've decided to call myself tapping so I can look at these stocks in a better way. How I'm actually investing, what direction I'm taking, and what stocks I'm currently buying. I'm sharing a lot of this information with you in detail. So, when you look at it that way, there are actually a lot of ways to make profits in stocks, especially when the stock market isn't doing well. Even without realizing it, there are many cases where the information I deliver to others gets delayed. That's why, as a safer approach, I've been running a YouTube channel. But even so, the reason I maintain this approach is because, first of all, it's because I have the will to succeed as an investor myself. From 2020 until now, those of you who have been watching my channel with me probably know very well that my investment philosophy and the way I invest have not changed much and have remained consistent. Even if it's just a little bit, I want to keep evolving and eventually become the best investor. I want to share that process with many people, and that's why I have this desire and ambition. That's what I mean. This content is related to the recent market situation. Last year, I introduced the investment method called the moving average line to several people. Personally, I have experienced a lot of real benefits. The reason is that even though I used the moving average investment method, I couldn't time my trades properly. In relation to this, I want to talk with you all about how we can do better next time and share some advice regarding this. In this adjustment phase, meme stocks like Trump-related stocks soared at the fastest rate in history due to the influence of the Trump concept, but the moving average investment method failed to give us proper sell signals. This time, the moving average investment method failed to give us proper buy and sell signals. The list of stocks that quickly recovered in this adjustment has changed, and there may be another adjustment coming. At this time, let's pick out stocks that are likely to recover quickly. And now, I'd like to make a request to Mr. Kim In-jung from Choice Stock. If you look at the main page of Choice Stock, you'll see the moving average line. For this part as well, I made a request in advance and they made it directly for me. I asked them to provide both the short-term and mid-term trends here so that I could see them at the same time with two different patterns, and that's why I made this request. So, just like before, Mr. Kim In-jung reflected my opinion quickly and applied it to the system. That's why it is like this now. Now, in choice stock, you can set the period between me and the person in front and check the changes in the movement average line. There are short-term and mid-term lines, but the mid-term line was added later. The moving average line, originally showing mid-term trends with 20, 60, and 120-day periods, has been updated to include a short-term moving average for quicker reactions and decisions. By analyzing the 5-day, 20-day, and 60-day moving averages, we can determine the stock price's trend. This perspective reveals how it functions. So today on the broadcast, we used the newly installed short-term moving average line to analyze the stock price trends of median tapping in advance. Let's discuss the metal platform stock, the most representative one. For metal, the golden cross with the 5-day moving average crossing the 20-day moving average happened on April 30th. The 5-day, 20-day, and 60-day moving averages are around $443, $442, and $579 respectively. So you can see that the golden cross occurred on April 30th. While the upward trend is not fully confirmed, a reversal is still possible. There's a blue panel at the very top. Since the 60-day moving average is still above, we should be more cautious. That's my view. Even on the intraday chart, it's similar. The golden cross, where the 5-day moving average crosses above the 20-day, occurred on April 28th. The trend has shifted, as evident from the current situation. However, caution is advised since the moving average remains at its peak. It's the same for NVIDIA. On April 29th, the golden cross occurred, but until now, the long-term moving average is still at the top, and I would say that the trend hasn't fully reversed yet. Amazon is similar as well. A golden cross occurred on April 28th when the 5-day moving average crossed above the 20-day moving average. However, the trend is not yet fully recovered, which is evident upon closer inspection. In the case of companies like Credit Tech, I mentioned separately that a golden cross occurred recently, but the overall trend is still downward. So the price is still in a negative trend, and Credit Tech is just drawing attention for now. That's how you should see it. Even Tesla is included. Since April 25th, a golden cross happened, with this short-term moving average crossing above the mid-term moving average. This is the delivered information. Similarly, for Alphabet, the 5-day moving average crossed above the 20-day moving average on April 25th, indicating the beginning of a bullish trend. TSMC faced a similar situation on April 25th. As long as the trend line remains unbroken, the stock price is expected to keep rising, allowing for a positive evaluation. Well, Broadcom is doing a bit better. The 5-day, 20-day, and 60-day moving averages have all been consecutively rising. The golden cross occurred twice. The first time was on April 24th, and the second time was on April 31st. Therefore, compared to other similar patterns, it can be explained that this shows a much stronger upward trend. Next Tracker had a golden cross occur once on April 25th. Next is Talon Energy. Talon Energy had a very strong upward trend. According to technical analysis, the moving average crossover occurred on May 1st, the moving average crossover. Many people are curious. First, the short-term line should be at the top, the mid-term line should be in the middle, and the long-term line should be at the bottom in order. Also, all three moving average lines should be trending upward. So, when these two conditions are met, the golden cross of the moving average lines occurs. And Vistra Energy is also positive. If you continuously overlay the 5-day, 20-day, and 60-day moving averages, a golden cross has occurred twice recently. It occurred on April 24th and May 1st, and you can see a positive trend. In the case of Uber, another moving average crossover occurred, and it happened on April 17th. On April 17th, the 50-day, 20-day, and 60-day moving averages were aligned, and you can confirm that all three moving averages turned upward. So, if we had bought Uber stock on April 17th as planned, the gain up to now would be 7.51%. Therefore, if we had bought the stock on April 17th when the buy signal appeared, we could confirm that we would have enjoyed a good increase in the stock price. Now, Uber next is Palantir. Palantir is even stronger. On April 11th, the moving average buy signal appeared, and this is the point right here. The 20-day, 50-day, and 60-day moving averages were aligned and trending upward. So, April 11th was a very important turning point. As you can see here, if we had bought on April 11th when the turning point appeared, the price has risen by as much as 31% up to now. In just 3 weeks, it's possible to achieve a return of over 30% using this method. The moving average lines proved to be a very reliable indicator. Strategy. Even for MicroStrategy, the signal to buy based on the moving average appeared on April 23rd. The 50-day, 20-day, and 60-day moving averages are all trending upward in order, and all three lines are showing an upward trend. So, if we had bought MicroStrategy on April 23rd, according to the promise, let's check what kind of results we would have had. Up until now, the return was over 10%, and there was a clear buy signal that could have brought a return of 10.38%. You can see it like this. So, what about Celestica in the end? On April 23rd, the 50-day moving average crossed above the 20-day moving average, signaling the beginning of a trend reversal. This is how you can interpret the chart. Now, the message I want to share with all of you here is this. We shouldn't just invest for 6 months and then stop, nor should we invest for just 1 year and be done. Instead, we should continue investing for 5 years or even 10 or 15 years for the long term. The important thing is to do better next time than you did this time. Joe Jong found one opportunity in a year, and Bayemek also found one opportunity in about 3 to 4 years while we were investing. That's why the next opportunity is more important than this one, and the next Bayemek is even more important. When you invest in the volatile United States stock market like this and experience these kinds of opportunities, how well can you handle them? Can you do better next time than you did this time? Our investment returns will depend on our response to these situations. So, I hope that all investors who are watching with me now will try to do better next time and work hard to improve their performance, just like I did in the past. Earlier, there was a topic where Amazon announced its earnings in the middle of the United States tech stocks, so let's move right on to Amazon. I'll organize Amazon's earnings results and highlights for you. Amazon exceeded analysts' expectations in the first quarter of 2025 thanks to strong performance in cloud computing and advertising businesses. However, when guidance for the second quarter was presented conservatively, the stock price dropped more than 3% after hours. First quarter adjusted earnings per share was $1.59, significantly beating the market consensus of $1.36 by 23 cents. Net profit reached $1.713 billion, up from $1.043 billion in the prior year period. It resulted in a massive upside surprise versus the previous year. Sales reached $1.5567 billion, an 8.7% increase from the previous year, surpassing the $1.5504 billion forecast by $5.8 million. As evident from the numbers recorded individually, the earnings results were not impressive. Let me give you a little more detail about the numbers. Amazon's business is divided into 3 main categories. The first is North American e-commerce, the second is international e-commerce, and the third is cloud. That's how it's divided. North American e-commerce sales grew by 8% compared to last year, and international e-commerce grew by 5%. Lastly, cloud is the most important. AWS grew by 17% compared to last year, and 17% is not a small number. But the problem is, if you ask me, recently Google and Microsoft have also shown strong growth in cloud. So compared to them, AWS sales growth rate might seem a bit lower. This was the primary cause of the initial stock price drop, and that's how it appears. If you look at it that way, there's the online store and also third-party sales services. The online store refers to products sold directly by Amazon. This was expected to be $56.9 billion, but it actually reached $57.4 billion. The third-party sales service recorded a 6% growth compared to last year, and its revenue was $18.4 billion, which is a 20% increase from last year. When it was $17.5 billion, it was a good sign that the consensus was exceeded. If you look at it this way, you'll understand. The net cash flow for the past 12 months was $25.9 billion compared to $50.1 billion for the same period last year. So it decreased significantly. The reason for this is that they spent a lot on capex. Free cash flow is operating cash flow minus capex. Operating cash flow is the total amount of cash generated by running our business as a company. The cash left over after subtracting all the money spent on sales is operating cash flow. Our own investment refers to the free cash flow, which is the cash remaining after accounting for necessary capital expenditures. Companies spend heavily on capital expenditures due to significant capital outflows. We made a lot of investments to build our data center, so you can see it like this. Next is guidance. Net sales are projected to be $164 billion, with a consensus of $161.4 billion. At the bottom, the operating profit is projected to be $17.5 billion lower than the consensus of $17.8 billion. That's why we couldn't see the minus here. You can clearly see that the reason the stock price fell was directly related to the guidance. Now, let me also explain what the Chief Executive Officer said during the conference call. During the conference call, Chief Executive Officer Andy J. Shih mentioned detailed issues. He said that most sellers did not pass the tariff costs on to consumers, but he emphasized that if the tariff issue worsens, there is a possibility that prices could rise in the future. Andy J. Shih said that the company has shown strong growth by finding new brands to add to its sales lineup, but he also warned that Amazon faces economic uncertainty in the short term. He asked investors to keep this in mind. How did this happen? In the past, during the pandemic, it was easier to buy various items at local supermarkets compared to Amazon. However, sometimes even the supermarkets lacked the needed products. During that challenging period, Amazon's extensive product range set it apart. How does this connect to artificial intelligence? The company's artificial intelligence business is helping to increase sales in areas like cloud infrastructure, and as demand for cloud services grows, there's a lot of potential for additional growth. That's what they said. Amazon is also planning to invest aggressively in the artificial intelligence sector. So our NVIDIA investors, stay strong and let's keep holding on to our shares until this message comes true. I'll now explain it in simpler terms for beginners. I do not evaluate individual stocks that many of you know and are currently investing in separately. Whether I buy Amazon now or sell Amazon, I don't make such considerations. Regulatory uncertainty surrounding the platform industry is causing market hesitation. Several economic indicators are suggesting a slowdown in the growth of the United States economy. So, in this market, I think it's easier to find more attractive stocks than Amazon. That's what I think. Among the 18 stocks in the United States top picks, some are more attractive than Amazon. Amazon is well positioned to weather the negative effects of United States trade restrictions on Chinese products. Currently, there are no clear signs of additional sanctions or regulatory measures from China or related to tariffs. The market appears more focused on the effectiveness of United States government policies. For stocks like Palantir, the likelihood of further upward momentum is not necessarily lower than Amazon, based on my personal assessment. However, despite that, AWS's market share is still number one. And if you consider Amazon's potential in the smart home era, I personally think that when it comes to long-term investments, Amazon is still a solid choice. Earlier, when I was reading an article about Amazon, I briefly mentioned Palantir, so this time I prepared some information related to Palantir. Palantir was chosen as the best program in the United States government procurement evaluation. It's about handling classified information, so let's take a look at what kind of news it is. For this report, we've made it so that even an artificial intelligence that can't read Korean can understand the summary. Palantir Technologies' illegal collection and tracking of United States military personnel's biometric movement data has been selected as the highest performing program in the Army's MAP evaluation, according to Bloomberg, which cited a new investigation into the matter. According to the April report submitted to Congress, Palantir's transmission, information, display, access, load, Titan truck, and other 4 weapon systems were named the highest and lowest performing programs. The United States Department of Defense forwarded Bloomberg's request for comment to the Army, but did not provide an immediate response, and Palantir Technologies also did not respond to Bloomberg's request for comment. Last March, the United States Army confirmed that Palantir Technologies had signed a $178.4 million contract over 2 years to begin the third phase of the Titan system project. Titan is a deep learning platform that uses artificial intelligence and machine learning to enable field personnel to quickly support strike operations. According to Bloomberg's analysis, the systems selected for the highest performance and program include next-generation ground-based weapons, Black Hawk helicopters, large-scale ground attack aircraft, helicopters for defense, communication relay satellites, integrated radiation detection and warning systems, and new missile launchers. Palantir Technologies has partnered with major defense companies in this contract, including RTX, and has also joined forces with Anduril Industries, Northrop Grumman, and L3Harris Technologies. Each Titan system is built on a large industrial truck and a trailer of similar size, and the trailer is equipped with a power supply device, satellite data linkage space kit, and other ground-based high-altitude system data that can be directly connected. Defense authorities state that 3 Brandon platform prototypes have been delivered, with 4 more expected by December 31st, and the final 3 by March 30th, 2026. Full-scale procurement will be decided after evaluating the prototype's operation and performance. The report mentioned that mass production of these vehicles will be decided after assessing their real-world performance, with initial deployment expected between 2027 and 2028. The military explained that the platform collects and integrates data from various sources, such as satellite and aviation equipment, and provides a centralized platform for analysis, thereby enhancing the effectiveness of information warfare. It was also evaluated that the company selected as the main contractor for the software-centered hardware program is a leading domestic software company, Hanmadi of the United States. Palantir being selected as the supplier for the United States Army's Titan program and its performance being recognized is a clear sign of the diversification of the market and the stable acceptance of defense budgets based on performance and results. By entering the defense information sector, it is expected that the existing software customers will be joined by more stable defense budget-based sales. The continued demand for defense-related contracts can be expected to contribute to long-term, steady growth. However, in order to move on to actual additional momentum, we need to see the process where the initial pilot supply is successfully verified in 2027 and 2028 and then leads to additional orders. As an artificial intelligence-based deep learning detection platform, Titan's performance must be continuously verified in the field. The investment value of a Korean company is created as many small and large investors buy and sell repeatedly. Today's closing content is about the United States stock market today. It's in the video prepared for today. Until recently, even experts couldn't fully recover from the momentum in NVIDIA. But today, I'll share several cases that explain why we need to buy NVIDIA stock at this point. This week as well, thank you to everyone who participated with us and shared your thoughts and support. Have a pleasant, relaxing weekend and enjoy quality time with your loved ones. If you have time, please also watch the special broadcast of Miji1 Choice sub-related content that will be aired tomorrow. Thank you. Let's keep fighting together until the day we all retire from investing in United States stocks. Have a happy day. Thank you.
The Trump administration is also spurring fears of tightening chip trade rules. The potential changes are adding to those other mounting risks for NVIDIA. The chip makers are also facing pressure tied to customer Supermicro Computer as it slashed its revenue and profit outlook for the third quarter. Here to decode what's ahead, semiconductor-related NVIDIA KeyBank Capital Markets equity research analyst John Vin. John, it's always great to see you. And I want to get your take first on, regarding NVIDIA, we use more custom-made chips or contract-made chips from the likes of Broadcom. Adjustments are being made in relation to NVIDIA.
I think that view is a little bit more premature at this point in time. We think we are still in the very early stages of generative artificial intelligence. The view that it's a zero-sum game between whether someone's going to go with a custom artificial intelligence chip or with a merchant graphics processing unit from NVIDIA, I don't think we're quite there yet. If the market starts to mature and we have, in latter innings, considering the split in composition, you need to step up and perform better. You have to be more careful, but right now this market is very unstable. NVIDIA is leading the competition.
Yes.
Broadcom is very competitive with Google TPU, but aside from Google TPU, most other customers are supplied by NVIDIA. John,
there was another headline that certainly got attention. I want your take on this one. Reuters reported, and this was late yesterday, that Trump officials are working to change a Biden-era artificial intelligence trade rule, capping access to United States artificial intelligence chips, potentially making it stricter. I'm wondering, John, listen, you're an NVIDIA investor. You read that. What should you make of a headline like that? Yeah.
I'm definitely on the discussion panel. That rule was at the end of December 18th. I have a wife play constellation for that rule. In other words, this is for American competitors or competitors who have obtained an NVIDIA graphics processing unit. Of course, in China, there is a direct plan, but the Chinese investors, our investors, the Chinese investors in other countries, they are able to obtain NVIDIA GPUs. So yes, I have concerns and worries about that. That is, don't worry about it. I mean, I've seen the same headlines as you that they're reconsidering it, but we'll have to see how it plays out. But it is certainly a concern and a little bit of a near-term overhang on NVIDIA stock at this point.
So, John, bottom line, is NVIDIA still a buy or even more of a buy at these levels after the declines it's seen?
I certainly believe so. The valuation's not fully pricing anything. And Nini Ondu, based on the system, we are recording a revenue of more than 20 times, and video is at about 35 to 40 times. The system is generating significant revenue. China's back to this year, we recorded 12 billion won in revenue. The revenue of this system is compared to the revenue of this system is not comparable. And also the investors there, these new platforms, GB200, NBL72, and others are with their closest competitors.
It's an Infidian. For investors, about this idea, this concern that the hyperscalers, the cloud giants, are going to start slowing down that artificial intelligence spending. John L. People is on the Microsoft guide today, talking about Microsoft at the Microsoftware conference. How do you think about it? I'm curious.
Yes, I haven't been able to listen to Microsoft. Signs that major hyperscalers are kind of slowing down. Obviously, there's a lot of course, Microsoft is expected to grow this year. But in the midterm market, you can see this slowing in the market. A few things about income related to India. However, the India branch has been strengthened.
John, NVIDIA, do you still have concerns just because this conversation is considered normal? Where is the best place to work at NVIDIA? Yes.
On the artificial intelligence side, another workout. Don't think of Zero SUM. They're obviously a flagship customer. Google's TPU customers also. Customers who have been working together for 7 years and many others, they have a very strong artificial intelligence position. Also in the analog side, with Texas Instruments, it has changed a lot. The sales of the modules, about the coefficient, the modules, 31H store pool geogurious life price. Do have Aeon behind the scenes tahu.
Thank you.